You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NYFI.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how are you doing today?
I am doing excellent. As you can see, I am back in my home office in between trips. As we spoke a week ago, I was still in Indonesia. Since then, I came home, had a trip to Sweden, and tomorrow I'll be off to Nigeria. But you caught me in this tiny window back home here in Denmark.
Yes. We are recording on Martin Luther King Jr. Day, and I was like, hey, Lars, maybe we can record on Tuesday instead of Monday. And he said, well, I'll be on a plane to Nigeria. And I said, oh, okay. It happens, Awesome. Well, we also have a guest today. We have Matthew from Hellmann Worldwide Logistics. He is the head of trade North America. Matt, could you give a quick intro?
Thanks for having me. I'm the head of trade for Hellmann Worldwide Logistics, as mentioned. Very excited to be here with you guys today. Essentially, my role within Hellmann is to kind of manage the carrier relationships and then look after all the import flows from Asia and export flows going out to the world. So again, very excited to be here and looking forward to the conversation.
Looking forward to the expertise that you'll bring to the conversation. All right, Lars, let's go ahead and get started with rates. Where are we at in the market?
Yeah, if we were to look, as we usually do, start out on the SCFI with the quoted rates, there actually wasn't a lot of change this week compared to last week. So from that perspective, it's fairly calm. What is interesting is if we then juxtapose that with the NYFI spot rates for actual loaded cargo, what we see there is there was actually quite an increase this week. As I think our usual listeners will already know, there is about a 3-week lag between the SCFI and the NYFI because, sure, it takes time from a quote until cargo is actually booked and loaded. And the increase we're seeing this week in the NYFI is simply reflective of the increase we saw in the SCFI before Christmas. Now, for me, the interesting part here is if we look at the Pacific, if I look both at the China's US West Coast and the US East Coast, the increase we see in the NYFI certainly is not as sharp as what we saw in the quoted rates back in December. If you're looking from China to US West Coast, the increase we now actually have seen for the cargo is only 73% of the increase that we saw in the quoted rates. If we're looking at China to US East Coast, the actual loaded spot rates are only increased by about half of what we saw in the actual quotes. This follows the pattern that we have seen repeatedly in 2025, especially when the SCFI quoted rates suddenly shoot up dramatically. What we basically see every time 3 weeks later is the actual loaded spot rates do not increase by as much as the SCFI actually indicate. So there is at times, at least what I would tend to say, you can either say an exaggeration in terms of what the market is doing if you want the most up-to-date numbers, or conversely, you can say the carriers tend to be somewhat over-optimistic in the spot quotes they're putting out there, and then realism kicks in and it's not quite as severe, at least on the Pacific. Because if I then take a look at the Asia-Europe rate and the rate increases this time around, there were also increases here on the NYFI, and the increases we are seeing right now on the NYFI is actually pretty well in line with what we saw on the SCFI prior to Christmas. So on the Asia to Europe, at least, we are not seeing this exaggeration effect. Now, we need to put all of this in context. The increases that we are seeing to some degree reflect seasonality. We have Chinese New Year coming up here in mid-February, and under normal seasonality, we would actually expect right now we are at the peak of Asia-Europe rates. Under normal seasonality, we would be about a week out from getting to the peak on the Trans-Pacific rates as well. So it's basically game over. This also is nicely reflected in the quoted rates, that they're not really increasing that much anymore. That is basically in line with normal seasonality.
Gotcha. And Matt, question for you. So with the freight rates softening on the TPEB market, are you approaching your contract pricing discussions sort of business as usual for this time of year? Are you seeing maybe more openness from carriers given, sort of the geopolitical nature of things right now?
I think it's a little bit of all of that, right? I think it's a little early to talk about what the long-term rates will look like come May. With the way the market is fluctuating just in January alone, it's up, it's down, it's up, it's down. The demand seems to hit its peak for Chinese New Year, right? So it's really going to come down to, I think, where we're going to see the spot rates when when we're ready to talk about the long-term rates, right? We all would like rates to be up. Everyone makes more money when rates are up. Everything is great. Unfortunately, when the spot rate is low, that long-term rate can't go too much higher, right? So there needs to be a little balancing there. And I think it's a little early now. We have started talking to some carriers about, their plans, their services. Red Sea, I'm sure Lars will get into that soon, about how important that may be and how that will shape up and how the contracts will look. But again, very early stages so far.
Yeah, that makes a lot of sense. And, it might be a good moment to pause and talk a little bit more about NYFI. So, if NYFI is reflecting what shippers are really paying, not what's being quoted, how useful do you think something like an index-linked contract could be in this sort of environment?
I think it's great. I think it's another option that we can offer the customers. We're getting a lot more feedback on index-based contracts. Obviously, the NYFI is playing a huge role within Hellmann. Customers seem to be willing now to sit at a table and talk about it. Carriers do as well. There's a lot more carrier discussions ongoing about using these index-linked contracts moving forward. I think the years of having a standard FAK long-term contract are pretty much over, right? They need to move with the times, and I think they're doing that. Some are more open than others, but definitely a lot more of the discussions are surrounding that.
Yeah, it's interesting to hear. We've gotten similar feedback both from the NBO side as well as the carrier side in terms of people being more open to different contract types this year, especially. Awesome. Well, and as you kind of alluded to, Lars, let's do a check-in on the Red Sea reopening. What is that looking like right now? What's the latest?
First of all, it ties in nicely with what you were just saying, Matt. What about long-term rates for rest of 26? How do you even make one rate for an Asia-Europe trade in particular when we are likely facing with a return to the Red Sea? In terms of what we're seeing right now, I would tend to phrase it that unless something goes terribly wrong, and there is a caveat, I'm going to get back to that, but then we are likely now in the beginning of the end of the Red Sea crisis. We have had CMA CGM over a year gradually ramping up on their services, but we've also discussed why they, to some degree, have been the odd one out. What is really interesting to watch here has been Maersk's approach. They started with one trial shipment back on December 19th. They had a couple more here in early January, and now they have announced that their Mekelle service is going to go over and permanently go through the Suez routing from February. For those unfamiliar with the acronyms here, the Mekelle service is the one that goes basically from the Middle East over to US East Coast and back. And it has been going around Africa. It is not part of the Gemini network. That's crucial because that means Maersk can make their own unilateral decision on that service. Also, what is important to note here is a substantial number of the vessels Maersk use on this service are US flag vessels. On the optimistic side, this means I would actually see Maersk's move here as a harbinger of a major shift to come. If the carriers are planning this well, that shift will begin in earnest after Chinese New Year, likely around the 1st of March or so. That is the best case scenario, and it actually should be also seen as somewhat of a base case scenario right now. The carriers will try to make that transition slow and methodical to avoid a lot of congestion. They might not be entirely able to pull that one off. That would be on the good news. The caveat I wanted to mention actually lies in Iran. And the reason I want to mention that, I don't think anybody has missed all the headlines of the riots in the streets in Iran. That doesn't necessarily mean we're going to see a regime change. There's been violent unrests many times over the decades in Iran, and the regime have always managed to quell that unrest. That may also happen this time. The reason I'm bringing it up is if the US decides to get involved, which at least Trump has alluded to potentially doing, there's another player here we need to take into account, and that's the Houthis. This is where the Red Sea comes in. The Houthis are obviously backed by Iran. They are their benefactors. This is the hand behind also the Red Sea crisis. The Houthis are leaning basically towards that if the US intervened in Iran, they could potentially also then start addressing shipping in the Red Sea again. And this is where it comes full circle, and why I mentioned that the service Maersk is now sending through is with US flag vessels. So if this goes completely off the rails, we may see a rekindling of the Red Sea service on account of the riots in Iran. That is an outlier scenario, but it's definitely there. The baseline scenario should begin to be a slow and gradual return to the Red Sea.
Interesting. So I would kind of assume that the vessels that were previously moving on the Mekl service were the U.S. flagships, right? Like
Yes.
they just didn't change it. So that's why there's this risk that exists currently.
Yes, and you can say then why, I was about to say run the risk. Again, we're back to this is a service Maersk is running outside of the Gemini network. If they are to change the vessels in the Gemini network, that would require also Hapag-Lloyd to be on board with a shift, which it seems that they are not, at least not presently.
Yeah, that makes sense. And Matt, so from a shipper advisory standpoint, how is Hellmann treating the Red Sea right now? Are you assuming it might normalize? Are you still planning on the disruption kind of continuing?
If weeks ago, I would have said, we've talked to all the carriers. There's no chance Red Sea come back anytime soon. But now, of course, with the medical service going through with Maersk, seems this is now going to change a little bit. I think, again, too early to tell whether or not everyone will follow suit. Let's knock on wood that nothing does happen to any vessels going through there now and everyone is safe. But I think until we really know that, I don't see the carriers making a sudden shift in returning to the Red Sea. And I guess a question quickly for Lars is, how long will it take for the carriers, if they all decide, hey, we are going to now use the Suez, how long does that take to pivot from the Cape to the Suez?
You can say if you were to decide overnight, that's not what's going to happen. But if all of them said, right now, we're just going to shift everything, that's going to take a couple of weeks. And then you're going to have the massive, massive congestion problems in Europe, which is why they want to space it out. Now, interestingly, at least my take on what's going to happen here is the carriers will do their level best to make a relatively slow transition because of these operational bottlenecks. But they're going to be pushed by the shippers to change more rapidly than they would like. And here's the reasoning. The moment it starts slowly, and let me know afterwards, Matt, how you see this one, but I see a lot of shippers that would look at a carrier, it doesn't matter which one. So let's say they're going to look at Maersk, just for sake of argument. Say, okay, Maersk, I want to ship from Shanghai to Rotterdam. Now you've got two choices. You got the one going around Africa, and you've got one going through the Red Sea, which is 2 weeks faster. I would actually like to book the faster one. And I can easily see a situation, if the carriers make a slow transition, you're going to have excess demand for the service that goes the short route through the Red Sea. That will push up spot rates rapidly on the Red Sea route, which in turn will push the carriers to shift more services toward the Red Sea faster than they otherwise would have.
Yeah, I would agree. And also at the same time say, you will have those scenarios and you will have that customer that says, no, I do want the faster routing. But at the other side of it, you will have that customer that says, yeah, that sounds great. And yeah, the rates may be a little lower. However, our supply chain is already built around the Cape now. This is where we're going to continue to go. This is the safer passage. Yes, some may take the risk, if you will, to go through. Others may not. So the question that remains is, will the carriers, when it comes down to it, have both routings and both rates available in the contract to use? And will you be able to just say, hey, on Monday I want the Suez, but next Monday I think I want the Cape?
You can say, I'm not sure you're going to see both of those reflected in the contracts. That will be somewhat nightmarish to actually manage. What I do see is, if there is a push by the shippers to use the shorter one, you're going to see that reflected in the spot rates. I mean, the carriers have really fine-tuned their ability over the last few years to ramp up spot rates, in some cases by thousands of dollars, almost from 1 week to the next. And that's the tool they're going to be using again.
Yeah, it'll be interesting to see how it plays out. But 2 weeks ago, I would have said there was no chance. Maybe at the end of the year, we would be talking about this. But now that seems to be changing. Contract season, as we all know, is fast approaching. So this will be a main topic going forward.
Yeah, interesting questions. I think, Matt, the questions you were asking, Lars, are top of mind for shippers, and especially your question on would carriers have both rates in the contract. And Lars, your response is it's a nightmare, but to like administratively keep up with that it's got to be spot on. I can't imagine having to try to figure that out with the invoicing part of things. Awesome. Any other thoughts, Lars, on the Red Sea crisis here?
Oh, that's the fun topic. We've had several weeks now on the podcast where fortunately there was nothing on the tariffs, and when it finally shows up, it is a downpour. Let's start with a very, very clear caveat first. From a legal perspective right now, there are no changes. There are no new executive orders. There's nothing new in the Federal Register. So from a purely legal perspective, nothing has changed. However, what has changed is a barrage of new ones. Let's start with a more benign one first. There's a tariff reduction of 5% on Taiwan. Obviously, all these tariffs are the US tariffs. There seems to be a deal struck between Taiwan and the US, where especially TSMC, that's producing semiconductors, have pledged they're going to invest a large amount of money to build facilities in the US. In return, Taiwan's reciprocal tariffs are going to be reduced by 5%. As mentioned, this is actually not in any executive orders or the Federal Register yet, but that seems to be the deal being struck. Next one up is Iran. This was basically the day after we had the podcast last week. The US announced that anyone trading with Iran will immediately be subject to 25% tariff. First of all, it's not immediate since nothing is legal yet, so this only exists on social media. That is what it is. 25% on any country that deals with Iran. It's not specified what deals with means, but Iran's largest trading partners are China, India, Turkey, United Arab Emirates. So they would be the first ones. China has already, in their own subtle way, said, well, if you do that, we're going to do exactly the same to you, which should not be a surprise because that is how China has acted all the way through 2025 as well. Also, since this is not actually put into place, will it come into place? Maybe. I think the good comparison here is also what was announced by the US last year, where it was announced that there would be substantial tariffs on anyone buying Russian oil. There's also a whole host of countries that buys Russian oil, including China. However, the only country that actually did see this tariff implemented was India. India is still subject to 25% penalty tariffs for buying Russian oil. No other country buying Russian oil are subject to that tariff. And we may see the same begin to unfold in relation to Iran. But if we are to take at least Mr. Trump's social media postings as where the US is going, we're looking at 25% tariff on all the major countries, which very, very likely would immediately also lead to a 25% Chinese tariff on US goods. So that's where we are on Iran. Then, of course, the one that exploded here over the weekend was Greenland. Well, I think we touched upon in the last podcast, the situation in Greenland is actually very simple. You have Mr. Trump that is very, very clear. He wants Greenland, period. It's also equally clear from the Greenlandic Prime Minister, they do not want to become American. And from Denmark and Greenland, that Greenland is not for sale. There's no opening for negotiations here, really. That prompted a message from Trump yesterday that not just Denmark and Greenland, but any country that doesn't support Trump, and for now, those are the 8 countries that have also been sending a few military personnel up to Greenland, they're all subject here from February 1st to 10% tariff, to be increased to 25% from June if there is not a resolution to give Greenland to the US. How this is going to play out, we don't know. Obviously, there's a lot of talk in the EU. Obviously, me sitting here in Denmark, this is quite the topic to follow, to put it bluntly. It's unclear where the EU is going to land on this one, but it does seem like the EU is not going to sit this one out. This is simply not going to happen. So if, and that is a major if, US decides to go through with these tariffs, that also means that the EU-US trade deal from last year is off the table. That was otherwise about to become ratified in the EU next week. In the current environment, that is highly unlikely to be ratified. This has repercussions beyond EU because it also shows anybody else that you can make trade deals with the US, but you have no idea how long they're going to last. They can evaporate overnight, creating an extremely volatile environment. Is this necessarily bad for the entire world? I would tend to say no. We talked about the trade bifurcation last week in terms of demand growth. This creates an environment that is enormously difficult to operate in for anybody importing cargo into the US. For anybody else where the US is not involved, we are seeing an environment that is becoming more pro-trade. We have in the last few days seen a new trade agreement between Canada and China, which is going to increase trade between those two countries. We have seen the EU now sign a trade deal with the Mercosur countries in Latin America. This was a trade deal they've been working on for 25 years. Honestly, if you're working on a deal for 25 years, it means you don't really want the deal. But because of the US trade war, all of a sudden they actually wanted a deal, and this is now becoming reality as well. I would expect over the course of 26 to see more such bilateral trade deals. So this whole US-driven trade war does negatively impact trade volumes and clearly creates an extremely volatile environment for anybody dealing with the US. But anywhere else, this seems to actually bolster trade and be positive news for trade growth. Coming all the way back to Greenland, the last one I want to mention there is, for now, it is a massive political issue. There are threats of tariffs. They're not necessarily real. The concern is whether the US will genuinely take over Greenland by force. I don't think that's a baseline scenario, but it also appears it's not a scenario we can rule out. So let's just add a few words, at least from a shipping perspective, on what would be the repercussions of such an act. First of all, it would again force EU to act. How can EU act? Sitting over here, at least in Europe, it would appear that there is at least a basis for comparing this to the Russian invasion of Ukraine, which would then include massive sanctions on companies and individuals in the US. That in itself would create the largest trade disturbance I think we've ever seen this side of World War II. In much, much more practical terms, if the US was to move on Greenland, there are two carriers we need to talk about, Maersk and CMA CGM. Maersk first and foremost, because they have Maersk Line Limited operating US flag ships. They are servicing the US military. It is going to be exceedingly difficult to see how a Danish government setup would allow that to happen under those circumstances. At least it would be a significant problem. Ironically, this actually involves the Mekl service we just talked about going through the Red Sea. And the reason to talk CMA CGM is they are the only other large carrier on the container side that are operating US flag vessels. They're doing that through APL. And the reason for bringing CMA CGM in is the French government has also been out very, very clearly supporting the Danish and Greenland position. I sincerely hope we're not going to go down that path and that scenario, but again, it is a scenario with a likelihood that is different than 0%.
Wow. Okay. A lot happening this week. That's a very good summary. And Lars, I think your perspective is especially helpful for the listeners in the US because we don't necessarily always get that. Our news is usually very American focused. So I think your insight as to how people in Europe are viewing this and considering it is really useful. Matt, I want to ask you, we've seen all these crazy tariffs throughout 2025. Obviously, now it's continuing into 2026. How is Hellmann keeping up with these changes?
Well, I think first to Lars's point, yes, there are a lot of changes. Some of them are real and some of them aren't. Because when they're announced on social media, okay, they're just announced on social media. So I think, the way Hellmann is structured now, the way we deal with our customers is the standard lines of communication, QBRs, face-to-face meetings, emails, this type of thing. That's all well and good. But we, as a Hellmann team, really focus on the customer experience. And things like tariffs, these are things that, hey, we can text message someone real quick and say, hey, I just read this. This isn't real or this is real. Or, hey, Yigi furniture coming out of Vietnam. This may affect you here, right? So we try to keep on basically all the customers. They have very personal relationships with us. So I think the only way really to navigate any of the things that are happening in our industry at this point is constant communication, even in some cases over communication, right? Because the quieter you are, I think the customers get a little wary of, well, why am I not hearing from Hellmann, or why isn't this not happening, right? So I think the more we give them and the more we put out there, the better.
Yeah, I think there's a level of communication, but beyond that, it's like consultation. This isn't real. Don't worry too much about it yet. It's not law. It's just we're hearing whispers of it or maybe shouts from social media, but it's something more to scare
right,
you.
Because they are our customers, but it's also very much on a personal level, right? With a lot of our customers now, it's very personalized. So yes, there are business aspects of it as well, of course. But I think the more personal you are, the more you know everyone, the easier it is to also communicate some of these uncertainties. Because a lot of the times, as we mentioned, we don't really know what tariffs are real and which ones aren't.
Yeah. And it kind of seems like it's a very individual basis in terms of the shipper, what commodity they're moving, and what tariff is currently making the headlines, or what potential tariff, in terms of if they're going to continue to ship, if they're going to try to front load cargo. You all seem to be pretty in touch with your customers in terms of helping advise them through that, or at least being really connected in terms of what they're going to do.
There's no doubt about it.
Awesome. Lars, did you have any other thoughts on the tariffs here?
I think the main here were at least positive news on Taiwan, and then massive risks related to Iran and Greenland, and those are very unpredictable because, yes, they're not real yet. They can be at any point. At least the president has signaled his intention of what he's going to do, but we don't know whether it's going to turn real or not. It could turn out to be absolutely nothing, and we'll be sitting here a month from now and nothing has really changed. Or we could have a massive problem on our hands basically from one day to the next. We honestly don't know.
Right. I think it was kind of interesting, the announcement of it being 10% immediately and then 25% when you look at June. So you kind of have a sense of the timeline that's in mind. It could mean nothing, but to me it was interesting to see that.
I might be the slight cynic here, but I would not put any faith in any timeline issued by Mr. Trump whatsoever.
It's fair, if history shows us. All right. Well, lots of news here. Obviously, we'll keep reporting in next week. But until then, thanks everyone for tuning in. If you haven't subscribed already, please be sure to. We're on Spotify, Apple Music, and we're also on YouTube. And until then, I hope everyone has an awesome week.
Bye.
Bye, everyone.
Thanks for listening to Supply Chain Secrets Podcast, presented by NYFI. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.